Okay. So good afternoon, everyone, and good evening if you're in Asia. Good morning in the US. I'm Hui, co-founder of CFTE, and it's a real pleasure to have Tanya Andreasyan with us today. And she's the editor of Banking Technology and Fintech Futures, and Paloma has given you more information about her. It's a real pleasure to have both the alumni and students of CFT on the webinar. So welcome to you and welcome to everybody else also. I really enjoy talking to Tanya because she's a wealth of knowledge about what's happening in finance, in technology, in fintech. She knows a lot in that space, and she does have very strong views on a lot of topics. So let me start with the first question. So Tanya, you do a lot of things, but one of the things that you do is that you're a writer.
Yes,
and
that's
so
true.
In the fintech world, what do you like writing about? What do you find interesting?
Well, the fintech world is a very exciting place to be right now. So there is a wealth of information and there are a wealth of subjects that we can write about. And I'm speaking for myself, but I enjoy writing about startups and new ideas, and also things around artificial intelligence, which I find quite fascinating, even if it's so basic things like chatbots and machine learning, and RPA, which is not, you would say, not like proper artificial intelligence yet, but it's moving that way. And that's what I really enjoy.
And in the course, you talked about this, we asked you about, innovative banks.
Yeah.
And you talked about this bank in Spain.
Mm.
And could you tell us a bit more about that bank and what do they do which is so special compared to other banks?
Okay. Well, I suppose they're not the only bank that is doing innovative things, but they're a very good example of having the right product, the right strategy, the right people, the right budgets, the right technology to put it all together, bring it holistically, if I may use that word, to bring to market a proposition that really resonates with their audience. So it's Open Bank. It's a subsidiary of Santander. So it launched in Spain recently, and now it's going to other countries, predominantly Latin America, where Santander already has a good presence. I think starting with Argentina, they have over a few million of customers. So they're online-only bank. They have moved all their technology to the cloud, which makes them quite efficient and also cost-effective. They have really identified their target audience, which helps as well. So you're not just going to everybody, trying to be everything to everyone, or just offering something that is very vague, like, a digital app for millennials. What does that even mean? So they target professionals and young professionals. So they have the right product. They also formulated a very good strategy in terms of how they offer it to market, what sort of message they go with. They spent a decent amount of money on branding, which I think is quite important these days. So the look and feel of their app, the look and feel of their physical cards, all these things, they all add up. So little things and big thing and a big picture, and all together makes a compelling proposition.
And how did they start? Because usually that's one of the main challenges of banks, which is we know what something good should look like. We know where you start from, which is not that great. And it seems like some people have the secret of going from here to there, but for a lot of them it's quite hard.
Well, I suppose it does help when you have the backing of a big major banking group or corporation, right? So what they started with is getting the right team in place. So they've identified the right people. They hired the CEO from the outside of the company. They gave him the reins to recruit his team, they gave him the reins, I guess, to look after the development and the budget and things like that. So although it is a part of the Santander Group, Open Bank operates on a very kind of self-contained basis. So they can make their own decisions. They can, do things that perhaps not necessarily are in line with the main corporate culture. So they have a lot more flexibility and, I guess, a lot more freedom to operate, and that helps. So once you have the right team in place, the core people in the team can then assess and look at which parts of the business, how they need to run. So technology, operations, processes, products, marketing, branding, PR. So all that together has to be pulled by somebody who's a genuine stakeholder, who genuinely understands and wants it to be a success, and who also has, I guess, the support from the backers or their shareholders, or sponsors, as well as the people from the ground. And then this is how you make it work. I mean, it's easy to say, right? But I'm sure, for example, Open Bank and other banks spent a lot of sleepless nights.
Yeah.
They probably had quite a lot of arguments and discussions, probably quite a lot of fighting, with other sponsors to say, we really need this, or make this happen, or, this is what we need to do. So no journey is ever like, I wake up and here is a wonderful bank.
Yeah.
Here it is. No, it takes a long time, and it takes a lot of nerves and, a lot of stress and whatnot. But if people are genuinely passionate about it and knowledgeable, because you can't be one without another, it is not going to work, right? Then you can make it a success.
So for example, here it would be an organization that has a backing of a larger organization and the resources, I guess, but which is not too close. So they still have their independence in terms of...
Yes. I mean, this is a good example. There are other examples that are perhaps in a similar vein, but are not as successful. So, for example, UBS, a major wealth manager and private banking group, a couple of years ago brought to market a robo-advisor called Smart Wealth.
Yep.
And again, the idea was the same, is you set up a separate team that works and looks after this proposition fully. So you're part of the corporation, but you're independent, you're self-contained. The technology was good, the product was quite good, the processes were good. However, they've just recently announced that they're closing it down. They sold it to Sigfig, which weirdly enough, UBS is a major investor in. So, and that is a very similar concept, but it didn't work, partly because the product wasn't identified properly, in my view, to really appeal to the audience they were going after. So what they brought to market was a bit more expensive and not as appealing as other propositions out there. So whilst everything was cool, the branding was great, the technology was great, the people behind it were quite driven and passionate and knowledgeable, the end result didn't resonate with the audience. So they suspended it, they sold it to Sigfig. Whether Sigfig will revive it or do something else with it, we have to see. But that's like an opposite example of...
it's really interesting. So it can work, but it doesn't always work. And so here we're going totally off script. And let's talk about Goldman Sachs and Marcus. Then,
oh, yes.
Which is also, I guess, a similar example. And we hear a lot about Marcus. If you're in the US, of course, you've heard about Marcus. If you're in the UK, you've heard about Marcus. I think they've acquired 50,000 clients in just a few weeks. And so what do you think of Marcus? And for people who don't know what is Marcus, it's this new, let's call that savings bank from Goldman Sachs. Which is, I think, branded Marcus by Goldman Sachs, but which is quite different. It's a new proposition for them. They didn't have that before, but they seem to be doing quite well.
Yes, I mean, it's early days, but they're quite successful in the US. So they offer, in addition to savings, they also do loans. So they're not a bank in a full sense of the word, as in they don't have a separate banking license. They don't do, for example, current accounts. But they have a really interesting proposition in terms of loans and savings. And in the current market, the savings accounts are not particularly well addressed, especially for the retail customers. And that's what Marcus is hoping to tap into. Again, having the backing of the likes of Goldman Sachs helps, right? Having the right technology in place, running cost effectively, because I think they're utilizing cloud a lot as well, which is a very good example of how cloud can work well. And having the right proposition, just attractive product, an attractive product that people look at it and say, oh my goodness, that's a really good savings rate. I think I'm going to put my money there. So.
Yeah. And do you know how they started? Do you know what was the story behind Marcus?
I don't know exactly, but as I recall in the US, Goldman Sachs looked and said, hang on a second, we are serving the wealthy people. What about serving the retail as well? No, there is an opportunity. So I think the rest is history, but perhaps you know the details better.
I think so. I don't know the story in terms of how they started, but in terms of what is interesting, I think is the strategic decisions that they made. Because we talk a lot about technology, but at the end of the day, technology is just a powerful tool for banks to implement whatever strategies they have in mind. And here it was a smart, I think, strategy to address a market which they didn't really cater to before. So there were not any internal issues of cannibalization, which is always one of the big things. And at the same time, in terms of creating an independent unit to work on that, also I guess helps these issues of internal politics, etc.
Yes, absolutely. So when everything comes together, and with a bit of luck, I suppose, with a bit of being in the right place at the right time, you can really make it a success. And I see markets developing quite well in the UK as well. They're successful in the US. I can't see why it wouldn't be successful in the UK too.
Yeah. And in the course last year, you talked a lot about Australian banks.
Oh yeah.
And because so you liked Australian banks in the way that they were innovating. Since then, do you still like them, or are there other regions now that you find also interesting in terms of?
Well, the Australian market is traditionally quite closed, so they have their big four, and they pretty much have the market locked down. But now there are quite a few banks appearing in Australia too, like challenger banks. So there is Judo, there is Volt. There are a couple of other ones that are proper banks with their banking licenses. With the new propositions, there's Ninja. So they're all having this, making a splash and saying, we are going to take on the big four and et cetera, et cetera. Whether that's going to happen, hopefully, because open banking that is moving to Australia as well is surely going to help too. And I guess, having the right proposition and appealing to the clients who maybe don't want to bank with the big banks for whatever reason, that does help. The Australian big guys also went through quite a lot of transformation themselves, because most of them were working on very old technology. And most of them over the past, probably I would say 10 years, went through big back office transformations and front office as well. Some were more successful than others. Some transformations were very, very eye-wateringly expensive. Some are still underway, having started many years ago. So it's, you have to look at every bank individually, kind of, and what their projects are and who are the people who, drive this sort of transformation, and also what do they expect, the outcome to be, and how deep their pockets are.
And now that we have much more experience of banks doing their digital transformation, and as you said, allocating a large amount of money to these projects. So what's the secret for good digital transformation?
That's I'm sure if anyone knew the secret, they would be like a billionaire, right? But look at, for example, in Australia, like Commonwealth Bank, right? They spent over $1 billion on their technology transformation. Now, CBA is a very big bank and had very, very old technology. So to change something like that of that size is going to be always expensive. I think they did it reasonably well. They started and they did finish. Yes, so I can imagine, I think, quite a lot of senior management changes and probably changes along the way. But the secret is, firstly, you have to be committed, right? So if you're starting on a journey, you have to understand, like, why are you doing it? How are you going to do it? And what's the outcome? Just to start on the journey and say, oh, we're going to be digital. Okay, but why? What does that mean? What are you trying to achieve with that? So there's got to be very clear objectives and goals set. Then throughout the process, you've got to keep tabs really on what's going on, and you have to remain committed. So if you start the project and then you forget about it or deviate somewhere else, especially if you're in the management position, that will reflect everything that trickles down. So how do you keep the people energized? How do you keep the people going, when they have to do the work in addition to their day-to-day jobs and things like that? You've got to have the budgets, of course. You've got to have the motivation, and you've got to have the knowledge. So to come out at the other end, with the result, that is tangible, not just like, oh yeah, we digitized. Okay, so did that make anybody's life better? Does that mean that the bank is now more efficient? Is it bringing any money to the bank, or what was what did you get out of that, right? Mm-hmm. So there are many different components, and of course you can't, as you mentioned earlier, just having technology, buying a cool piece of tech and saying, oh, now all our problems are solved. It's nothing. Technology is an enabler. Without the people, the processes, technology is nothing. So it's just a piece of software. It's not going to make your life better. It's not going to make your life wonderful, or suddenly make a business case on its own.
Yeah. And now let's talk about challenger banks. So we talked about traditional banks. Some of them are transforming themselves and doing it well. And then we have new challenger banks. What do you think of challenger banks?
I like challenger banks. I like challenger banks. I think every market that has been too settled and too kind of, controlled for too long is always ripe for disruption. And it's always, at the end of the day, it's good for the end consumer. And that's what happened in the UK. Kind of also spurred all the big banks into action. So the guys like RBS are now creating their challenger bank, right? HSBC is creating its challenger bank. RBS is even talking about totally rebranding. Had these little challenger banks not come to market, I think the big guys would have continued as they are, so which can't really be that good.
Which ones do you like? Which challenger banks?
I like challenger banks that have a clear vision of what community they are serving, what problem are they trying to solve, and what's their niche market. So the challenger banks that have a view of genuinely making a dent in the market or genuinely making people's life better, as opposed to those banks that just want to make a quick buck. We start a bank, then we sell it to somebody very quickly, we make money. I totally get the business idea, but for me personally, I prefer the banks that have some sort of vision. So the banks that are looking at the SME space, which is genuinely, particularly in the UK, is underserved, and the poor SMEs have really suffered in the hands of the big banks for years and years. So the guys like your Tide and Shawbrooks and Aldermore's, come in and saying, okay, we're gonna genuinely help SMEs, with their businesses.
We do use Tide. So at CFTE, we use Tide.
Oh, well, there you go. Yeah, so are we allowed to endorse anybody? I'm not endorsing anyone, but Tide is an interesting example of a banking service that really solves the issue for lots of SMEs and smaller entrepreneurs, right? In terms of how they bring different parts of the business together, invoicing and accounting, reporting, things like that, and having a community also where people can discuss. Then there are banks like ClearBank, which I think is a very interesting bank because it is not a current account offering bank. It doesn't do any retail banking. It's specifically an agency bank. And I think they're doing really well. And I can see how their business model can develop because they are one of now 4 or 5 clearing banks. So there is definitely demand for that service. They have an interesting new technology, new proposition. So they offer agency clearing banking as well as their tech stack. Again, it's cloud. It's newly developed. Obviously, we'll have to see how it scales and everything because they're at the start of their journey. But as far as I know, they have over 10 clients now. So yeah.
And I heard they're doing really well also. And fintechs, because I'm sure you receive a lot of pitches from fintech startups. What do you find interesting? What do you find crazy?
Oh, there's a lot of crazy out there. That is without any doubt. Fintech is such a broad term. Everybody's calling themselves a fintech. You look at any software company, even a big company that provides technology to financial services, well, technically they are a fintech, right? So it's a cool word. So everybody wants, to jump on the fintech bandwagon. There is a lot of crazy going around the more newer and emerging tech. So there's a lot around crypto and blockchain, which is just Wild West, So we get a lot of really crazy, ideas around that. But there are a lot more fintechs that are down to earth and have very interesting propositions, particularly, again, in the areas that have problems that need solving. So the fintechs, in my view, the ones that have genuinely found the problem and said, okay, this is the solution we are offering, as opposed to, oh, this is a solution, let's go find a problem for it. These are the ones that, are going to be successful. So anything, open banking, payments, mobile and digital, obviously are the things that there is a lot of demand for.
And if you were to give an advice to a 20-year-old, who wants to get into finance in general, what advice would you give?
Well, it's an interesting area for sure. It's definitely an area that's not going away anytime soon. So if you do want to build a career there, it's definitely an industry that you can. You have to, I think, be quite bold, be quite determined, and also be open to new things, and think that if you have learned something and this knowledge will carry you now to the end of your career, that's definitely not the case. Yeah. I mean, any 20-year-old I can imagine is open to new things anyways, but it's just never to lose that. That's important because the industry is changing and developing so fast that you always have to keep your mind open, and also to keep your sort of abilities to onboard new skills and onboard new knowledge, and to be sure that, yes, your career will progress and you won't be obsolete, in 10 years' time.
Yeah. And I still have a lot of questions, but just want to see if we have any questions from the forum. But I don't know if it works.
Technology.
Yeah, that's the issue of technology. Otherwise, don't really have a lot of questions. Okay, I do have the questions. Any tips for banks hoping to digitalize?
Oh, wow. Well, digitalize is a very broad term, but before you digitalize anything, you've got to understand what the end game is. Why are you digitalizing? Because that will help you to choose the right technology and to implement it correctly. Because to just digitalize is a meaningless word, although it's probably PRs and marketing love it very much. You have to understand what it is you're trying to digitalize and why.
Okay. I have a question from one of the alumni right here. So you're saying, at the moment, challenger banks are not making that much of a big impact, on large banks. Large banks are also, buying a lot of the fintech, startups. So do you really see a future for challenger banks?
I think so. Yes, quite a lot of them might not, succeed in the long term. Quite a lot of them might be bought by big guys. However, I think there is always an opportunity for challenger banks to develop and to grow. Okay, so that maybe they might never be the size of RBS or Standard Chartered, or any other ginormous bank, but in their respective markets, they still can make a very significant difference. So if you look in the UK, for example, at the guys like Metrobank or Aldermore, yes, so they're not huge, but they're very, very noticeable, and they're making a good progress, and they're making very good impact. So absolutely.
And so we have another question, which is banking versus other industries. Do you think there's a difference between the digitalization of banking versus the digitalization of other industries, or is it exactly the same kind of challenges that big banks would face, just like companies in telecoms, pharmaceuticals, and others?
My expertise across other industries is not that great, so I really don't think I can, go into much detail about that. But some industries definitely digitalized faster and better than others. So but a lot of them are facing the same issues and problems. So quite a lot of them have challenges that are coming and eating their lunch.
Yeah.
Quite a lot of them are losing their market share to more agile and more sort of modern and progressive companies. So, and that happening across retail. I mean, I don't have to bring the example of Amazon, against Toys R Us or whatever, so everybody knows that. So you can look at the telecom space. I'm sure there are examples there as well. So I think industries can learn from each other in terms of mistakes and maybe master strokes. But I believe that banking perhaps now is in the biggest race to digitalize. And that, of course, is hastened by the regulation. So I'm talking the European, banks with a PSD2 and open banking. And also, I think the US market is changing as well with their, payments, progress and real-time payments, coming into play.
Yeah. Open banking and PSD2. Do you see it having an impact today?
Well, depends who you ask, right?
Yeah.
So for the fintech space and the paytech space, absolutely, because suddenly you have this flurry of startups and entrepreneurs coming and setting up their companies or, starting new services, specifically catering for their PSD2 and open banking, which they wouldn't have done had this regulation not come into play. And it's a big, big market, right? So UK, Europe, there's a lot, it's a lot of space for everyone, I think. For consumers, it's very beneficial as well. However, I think on the consumer side, because there hasn't been a lot of talk or education about it, that actually for people to understand it and to say, oh yeah, I'm definitely going to, make the most of it. At the moment, that's not happening, or happening a bit slower, perhaps than the regulators, may have anticipated. But it's definitely, it is a revolution, right? We're just at the start of it. Once it gets rolling, I think there will be a massive, massive impact.
And I have one last question. And also, I forgot to say for people on behind your screen, we also have two alumni here in London. So Andrew, who's coming from Taiwan, and Ibrahim from Cardiff. So if you have a question you'd like to ask, that'd be great to have a question from you. But let me ask one question first, because you talked about Amazon. And so last week I was in a South Summit in Madrid with Paul Misner, the head of innovation of Amazon, which is an amazing company in terms of innovation. And he said, the way for us to innovate is really simple. We don't start from where we are, we just start from what we want to reach. And it's almost like we write the press release of what is the thing that we would like to do at the end. So their way of innovating is, okay, so what is really the product I want to give at the end for my customers? And then I'll try to find a way to reach that end point. You talked about in the course about the example of Kiwi Bank, which I think also tried this kind of approach, but I think it was quite challenging for them. So do you think it works in terms of financial services, or is it much more complex in financial services versus Amazon?
I think it's a lot more complex, mainly due to the regulation. There is a reason why Amazon, is not a regulated bank. Everybody keeps bringing up that, like, oh, what if Amazon becomes a bank? And they might, but there is a reason why all these big companies do not become fully licensed banks, because they know how much regulation there will be upon them, and that will, I think, in a way, will impact how quickly they can innovate. So you might come up in a bank with a great idea of the end product, but then when you start working back, you come across quite a lot of barriers that it's very difficult to overcome, being a financial services player, regulated, heavily regulated. But there is nothing that stops you from aspiring to it. You can definitely, there gotta be some products that you can do this way, maybe not everything, but on a smaller scale, it's definitely worth trying, for a Kiwi Bank. I'm sure they'll get there eventually.
My iPad is updating now with a lot of questions. Andrew, would you have a question?
Quick question on, have you seen any core banks lately that's integrated with blockchain in their infrastructure?
So the question from Andrew is any bank which is implementing or integrating with blockchain in terms of infrastructure.
Oh, there are loads of banks that are doing experimentation, but beyond that, I'm not really aware, but I'm again speaking from my knowledge of the banks that are genuinely integrating, their infrastructure with blockchain. So there's odd projects here and there, proof of concepts, pilots, but nothing on a big scale yet, I guess.
Ibrahim, would you have a question for
Yeah,
Tanya?
just a quick question for Tanya. It's regarding the two hot, I would say, topics these days we hear is one is blockchain, of course, the other is the open banking or APIs, to put it this way. So in the next 3 to 5 years, which one do you see taking the lead? Is it APIs or is it blockchain which will kind of dictate, the banking industry?
So the question from Ibrahim is between blockchain and APIs, who wins in the next few years?
I think that APIs are already here, whilst blockchain is still as technology and in terms of its application to make a big impact is still more than 3 to 5 years away. So API, for me, is a more imminent technology and processes and ops. They're going to take really make a big impact in the next 3 to 5 years, possibly followed by blockchain. Still, the jury's out on blockchain.
So we have a great question here from Alibaba.
Mhm.
And can someone with no technical skill get a job into fintech?
Well, I mean, fintech is a company, right? So not everybody who is technical, should be in fintech. There are other areas in a fintech as a firm, to be involved in. And for example, business products, marketing, just ops that are not on the technical side. If fintechs were only consisting of technical people, I think they would struggle to get past technology and get into the market. So yeah.
Yeah, and for Alibaba, I think you should definitely look at our courses because you'd get the answer in the courses. Another question: if you want to implement digital transformation for a traditional bank for SMEs, which challenger banks would be good examples to look at?
Oh, the digital transformation for SMEs. That's a very good question. Let me think. Existing banks on the challenger bank front, I think the guys like Shawbrook are worth looking at, and Aldemore. Now, I wouldn't say that they're purely digital because they have their physical presence as well, but they are a good example of something that is already existing, up and running, as opposed to just being built up. Another interesting example worth looking at is Redwood Bank. They just launched, so they're a year, I think, or so. So very, very young, very new, purely focused on SMEs, a UK bank. The first instance of Microsoft Azure Cloud deployment in the UK, quite new technology and quite digital focused. So good bank to look at.
A question about in-house or outsource digital transformation. What do you think of banks incubating new projects in-house or acquiring fintech startups as opposed to partnering with startups?
I suppose it depends on what areas they're looking at, and also it depends on the size of the bank and its complexity and its in-house expertise. So there are different good examples of both, as well as bad examples of both. But an interesting, for instance, example, Standard Chartered, looking inwards into their own people, calling entrepreneurs, to sort of cultivate new ideas, to cultivate digital transformation from within, because just by virtue of being a giant bank with so many people working there, the bank had decided that there's got to be somebody within the company that is knowledgeable, right, and wants to share their ideas. So why don't we look at those? So they hold quite regular sort of projects and get-togethers and entrepreneurial sort of competitions and things like that to bring out the best from what they have in the company. So yeah.
So both could work.
Both could work. It's just sometimes if you have in-house expertise, look at it. If you don't, then obviously look elsewhere.
And perhaps if I could add to that, I think it also depends on the sectors. Because, for example, when we did the course on artificial intelligence, what we found is that almost all banks work with external companies on artificial intelligence because they just don't have the resources internally. So it's very, very hard for banks to have enough resources to do AI. Whereas in some other fields, which is more like, for example, in the normal automation, then they can do it internally.
Oh, absolutely, absolutely. I think it makes perfect sense. If you don't have expertise in-house, if you don't know, if it's a new area and you just don't know what to do, I think it's very, very sensible to seek help elsewhere externally, right? Than try to kind of create something yourselves.
And so a question from Puya about digital transformation, which is not just about technology, but also a lot about people and the culture. And so the question is, what's the quickest and most efficient way in implementing culture transformation, and also to make sure that the employees don't feel threatened by this transformation?
I don't think there is such a thing as the quickest and the most efficient way of changing the culture, right? It's easy to say for example, new startups or smaller fintechs or smaller challenger banks that come to market with a culture already there. So, but when you're talking about a big established institution, with years and years of legacy, carrying on with them, it's a process that takes a lot of time and a lot of effort. But it is absolutely correct that it's very important to make sure when you're transforming the culture and the people unless of course you are trying to get rid of them, but if you're not, you have to explain to them that your jobs are not under threat and your future is safe with us. However, to ensure going forward, you've got to do this, and this. So the culture, any culture transformations comes from above. So unless there is a full buy-in from the shareholders, the stakeholders, the senior management, there is no way that you would ever succeed, with your culture transformation. So the people at the top have to do more than just to say, oh yes, we're going to transform culture and then do nothing about it. So they've got to start themselves and lead by example so that the people who are working within the organization can see this, aspire to it, and also say, okay, I feel like I'm genuinely part of this transformation journey and it's not just imposed upon me, Yeah,
no, I fully agree on this part, which is you need the tone from the top and making sure you have the example from senior leadership. I think I would also add, when we think of all the different steps which are required, a lot of people in finance today are at the level of awareness, which is something is happening in finance, but I don't really know what. And so I guess that's why you have also this fear of the future, because they know that something is happening, but they don't really have the tools. And I think it's quite important to go from this level of awareness to knowledge, to really understanding what happens and being able to get the right tools before you can apply it to your job. And only, I guess, at the end, once you have the knowledge and the application, you can start changing the culture and the mindset. But you can't, it's quite hard to change the culture when, people don't have the right knowledge.
Oh, absolutely. Education is very, very important. And I think big organizations and small ones that have people working for them have to share the responsibility of educating, their workforce and bringing that awareness that you say. So again, it's a journey that you've got to start from the beginning, right? You can't just say, okay, we're all transforming now. So suddenly you're like, oh, wake up the next morning and you suddenly all knowledgeable about all the things that are happening. It just doesn't happen. So the organization has to support all the steps from awareness, as you say, to education, to transformation, and the end result, and also helping people along the way.
Yeah, I agree. A very interesting question from Jeremy, which are some interesting ways in which banks or startups have reinvented the customer journey.
Okay, reinvented. Let me think. There are plenty. Look at the challenger banks in the UK in terms of customer journey. The guys like Monzo, for instance, and Starling, they were the first ones to bring to market this opportunity for a customer. For when I start banking, I can open an account very quickly. I can do it very easily. I don't have to wait for weeks for paperwork to come through and things like that. I can log in, via biometrics or selfies and, that sort of stuff. So they are the guys that genuinely offer something that is very different. Whether they reinvented it because they didn't have anything before then, probably not, but they just looked at it and invented it from scratch and thought, really, okay, so if I'm a customer and I want to open a bank account, what would be the easiest way, for me to do it? What would be the most efficient and the less the less stressful way to do it? And they, I think, did it quite well.
No, I agree with you. Onboarding seems to be, such a, when you're trying. That's why, when we said we're a customer of Tide, the reason is that for our previous company, we tried to open an account with large traditional bank, which took us pretty much 2 months before we could open the bank account. And Tide took us 5 minutes on the phone.
Yeah, I mean, it's a very good example. Metro Bank, for instance, you can walk out with a card in a couple of hours, with an actual physical card that you can start using when you open an account. Try going to other high street banks and trying to say, no, it's a few weeks, it will come in the post, then your PIN will come in the post another few weeks afterwards. And so that's a very good example, again, of reinventing the customer journey. So you want an account, you have it there and then, you can start using it there and then. You can start shopping and, spending money and do everything that you would do when you, have a bank account. There are quite a few examples from actually Asia of banks reinventing the customer journey in terms of adding things that banks traditionally don't offer, like a lifestyle, it's a lifestyle. So you can order a cab, you can maybe order a takeaway, all from the comfort of your app, of your banking app. You can purchase something online and things like that and pay for it there and then without leaving the app, going to another app to do it. So that's an interesting sort of reinvention of the customer journey. And of course, it's limited at the moment. You can't do everything. However, when you think about it, that's a really good idea, because the less apps you have on your phone, right? The less apps you have to download for this, and this. And if you can do everything from one, I mean, isn't that great? Isn't that convenient for a customer? Doesn't that then ensure that they spend with you more and bank with you more and just, be more loyal to you?
Yeah. And so the last question from Ashari Ali, which is perhaps the most difficult question, can fintech and new technology like blockchain or AI prevent a repeat of the Lehman crisis?
Oh, you know what? The Lehman crisis is a lot to do with just the human nature and the human greed. And yes, new technology can put some kind of safeguards in place, but we are all human, right? So, and that kind of greed and desire to make good money and all that, you can't take that out of the equation, right? So I don't think we can.
Yeah, no, I agree with you. So thanks a lot, Tanya. That was really enjoyable for me. I hope it was enjoyable for you also.
Thank you for inviting me.
And we will have other webinars in the future, but also we have an event on the 6th of November in London. If you're in London, it's going to be really interesting. It's going to be about the digital transformation of the trading floor. So we're talking specifically about the trading floor. We'll be doing it with Mitsubishi UFG. We will be with a head of sales who happens to be also in charge of innovation, and 2 CEOs, the CEO of Behavivox, which is a really interesting, one of the fastest growing fintech startups that works on mainly monitoring on the trading floor, and the CEO of Mosaic, who does data analytics for banks like JP Morgan, for example. So come if you're in London, and thank you very much, Tanya, and see you next time.
Thank you. Thanks a lot.
Thanks a lot.